Alright everybody, it is 3:55. The markets are about to close in 5 minutes. We're looking at the 10-minute chart of the spiders, and it seems like the spider is fighting back. We had this really big red candle. We put in a big reversal. Now we're putting in a reversal bar, which shouldn't be a surprise based on the technicals. You did have a lot of support here. Now, last night I posted on the website that the market could go either way. It could go up or down, and I know, when you look at the media out there, the media has changed very quickly. Everybody was kind of cheering, oh, we're going to make it to these all-time highs, and, we're going to go beyond that, okay? Now we're getting the media hype that we already have the old all-time highs, but we don't really see much out there in terms of going above that level, going higher. So the media is not that bullish anymore, and that kind of raises a flag with me. Okay, that makes me wonder, because I'm a contrarian, it makes me wonder, okay, if maybe the markets will go up a little bit higher. Okay, and there is a little bit of sanity in my insanity here. Let me explain. Everybody is focused on Cyprus. Everybody's talking about bank runs, about how we don't have enough money, and all this fractional banking and whatever everybody's talking about. Now we're talking about North Korea and all of that. So forget that. Okay, what you want to do is you want to be a contrarian. Okay, so as soon as somebody is bearish, you want to say, wait a minute, does the market have a little bit more upside? And that's what we got today. And I know this is yesterday if you look at it, and I know a lot of media out there, or maybe even technicians like me, might have said, well, this is bearish. I guess we kind of had this big, downhill move. Now we consolidated. So everybody probably said yesterday we're going to go lower, okay, based on this, based on yesterday's action. And then also logic says, well, if you're at all-time highs, you're into resistance. Even I think like that, okay? But when I see all of that out there in the media, it kind of makes me wonder if I should take the opposite position. And that's why I told you yesterday that the market could go either way. We could go up or down today. Fair analysis. And I gave you two plays. I told you if the market goes down, look for a financial. Financials have been very weak, and this is what I said, okay? Based on yesterday's action, I said we had a bearish consolidation pattern, just like the markets yesterday. It's just that I like this one a little bit better, okay? And I said don't chase the markets, okay? Don't chase an entry. If you get an entry around this bearish consolidation pattern, then go short, okay? Well, that was one option. Obviously, that didn't happen because that was my option if you wanted to go short, if the market sold off. Well, the market gapped up. So my other option that I gave you was CVX, okay? It was CVX, and I said yesterday that CVX was putting in this bullish consolidation pattern. It looked like a clean pattern. Obviously, don't chase, okay? Meaning that this morning when the market opened up, you weren't the fool that bought it here, okay, at almost 120. And I even said in my posting that this is resistance, okay, that if you wanted a breakout, you would have to get through this level, this 1980 first, okay? So I told you this. If you bought it here, well, you're not listening to my instructions, okay? But I just said we have a good bullish consolidation pattern. So if you're able to find a setup, go long, okay? And let's see how you could have entered this CVX trade, because obviously this was the other alternative if the market's gapped up, okay? What you could have done is you could have drawn a little bit of a channel, a little bit of support here, and you could have noticed that this blue line right here would have been some support. So if you entered around this area right here, okay, you would have seen some support, and it broke above those two MAs and ultimately would have given you a nice profit. Let's go back and look at the spider because it's 4 o'clock. The market's just closed. Okay, like we saw a couple of minutes ago, the market got a little bit defended in the last 10 minutes. Very common to see this. We even saw it yesterday. We had a down day yesterday, and the last about 20 minutes of the market trading yesterday, we saw a little bit of upside. Same thing today. We saw a little bit of a downhill move and the market got bounced back, okay? But you were into some technical support here off the gap window, okay? Now, I alerted you around this area right here. Now look at my Twitter page. I don't remember the exact time. I think around here. But what I said is that the market would probably break down lower, okay? I either said it on the second candle here or there. I'm not sure. Look at my Twitter, okay? And the reason why I said that is, number one, we're at all-time highs. So the question is, how much higher can you go on an intraday basis? And if you look at these candles on the spider, you see that we have a lot of wicks on the upper part of the candle, meaning that bulls kept trying and trying and trying, and basically they were just in a range throughout half of the day, right? Okay, so we had a little bit of a breakout the first 40 minutes, but then we were just basically going sideways. And the bulls tried here, put in, got deflected by the bears for about 30 minutes. They kept trying again. This time, look at this time. This time it was weaker. So basically they went sideways. Then they got deflected again by the bears. Tried again, but now you're into this 20 EMA as resistance, which you didn't have before. And what happened? The market got taken down lower. And I said around this candle that there would be some support around 156.62 and that you should get a nice scalp out there. So if you entered around this area right here, got a nice little scalp, very good. Could have also entered lower. Now, sometimes I tell you my scalps ahead of time, okay? So it really depends on what you see. Obviously, my scalp was based on this gap window right here, but it was also based off the 50 MA. So obviously, if you see the 50 MA level being tagged before the gap window, sometimes it happens that people buy ahead of the next level. So if you know how to read charts, either way, you would have made a nice little profit. Another one I want to show you. Now let's go into the trades that I actually took and that I posted. And again, follow my account on Profitly because I post my trades publicly. Okay. Now, one thing that I took is the SDS. SDS is the double inverse of the spider. So in other words, it tracks the spider, but it does it in the opposite direction, okay? And it's more powerful because you can make more money more quickly. So sometimes when I have a swing out there and I'm expecting some sort of reversal, I'd rather go out there and buy the SDS. And that's what I did. I alerted you for the SDS around 43.74. Okay, I wanted it a little bit lower right here, okay? But I was very slow on my trades, and unfortunately I got it here. Nonetheless, even though I would have liked a better entry for a couple of cents, we basically broke out, and this is the same thing as the spider. The spider broke down, and what did the SDS do? The SDS broke out. I can't even speak today. I don't know what's wrong with me. But this is a swing position. So you're already in the money. Okay, protect it. In other words, if tomorrow you get this area right here tagged, that's fine. Get out of the trade, break even. You're only losing commissions. But we are already in the money on this trade, so that's really nice to see. Okay, we even made it as high as this right here, this 44.12 level, and so considering we just entered it here for a swing, and it's only a $44 share. It's really nice to see a 40-cent profit. We were up by over 1% during the day, and I'm gonna hold this one for a couple of days. And of course I'm going to keep a break-even stop, and you should do the same thing. And I'll keep you updated. Check my website, TradeTheseStocks.com, and I'll post some exits for the stops and targets and so forth. Okay. Now another trade that I took. Now moving on from the swings and going into day trades. I had a very easy day today. Actually, I didn't want to bother too much with the markets, and sometimes you get days like this. I went out there and ran my errands and things like that. And right now I have my window open, and you can probably hear my birds outside of my trees. So I just wanted to have a nice day trading, and that's okay. Sometimes you need to have one of those days. You don't have to be out there and taking every single trade, okay? So I took it easy today. So today what I did is I alerted you guys for the VXX, and I got in at the 1974 level. I alerted you around the 1974, but I got filled at 1975, okay? And I got less than 2,000 shares, okay? Now I'm going to be honest with you, I wanted 5,000 shares, okay? But maybe this is good because now I can keep proving to you that you can make money from a smaller account, okay? And so I got filled on about 1,900 something shares, not even 2,000 shares. I went long at 1974. Actually, I did get filled at 1974, and I closed right here at 1986. And let me give you some lines here so you're not just looking at my cursor. I entered right here, okay? Well, lower than that, but I don't know how to draw, okay? At 1974 right here, and I exited at 1986 right here. Now, that was a sweet trade, wasn't it? I got 11 cents on a stock that's only $20, okay? And this is a good example because if you download the stop out mandate that I have, it kind of shows you that if you have a stock that's only $20, your stop loss should be only a couple of cents, okay? So the stop out list is going to tell you that the stop out should only be 6 cents, okay? And this would have been good practice for you. If you took this trade, it would have been good practice because you were out of the money right here, okay? So we were down by only 2 cents, so that's great. However, if you went down by 4 cents further, you would have gotten stopped out, end of story, not looking back. Good money management, okay? However, we did well. We even put in this nice little inside bar. I was kind of debating if I should exit the trade right here, but then I figured, well, you know what, it's lunchtime. There's not going to be volatility anyway around lunchtime, and if it comes back, it will probably come back later on in the afternoon. Now, granted, you can, argue with me about the VXX not exactly tracking the markets in real time, but I find that for the most part, it does track markets on an intraday basis, so it does kind of follow certain rules. So I said, well, you know what, let me just wait on it a little bit. It probably just wants to break through this 20 MA, okay? It's been around this level anyway, okay? So it's not much resistance, but I'm going to have some patience. Break even stop, no problem. So I held the position and it started putting in this inside bar pattern, which I kind of now started loving it even more because I knew that if this pattern played out, eventually we would have a breakout to the upside. We would get above the 20 MA, this orange line, and that's precisely what happened. And I took my profits at 1986. I got 11 cents out of it. I think I made about $205. And the whole position was only $38,000, okay? Which is not a lot because most of you should have at least a pattern day trader account, margin account, meaning that, only a fourth of that money would be coming from you and then the rest would be coming from your broker. And the good thing about these margin accounts is that as long as you close your position by the end of the day, which is really what it's used for, you don't accrue any interest at all, okay? So you don't have to worry about it, okay? So it was just a very simple $38,000 position. I made 11 cents on it, $200. Good enough for me. And eventually, we'll start building up our position sizes. Right now I'm just trying to kind of do these small little positions for now, and it worked out. I wanted more shares, but I didn't get them, so this is now serving as a good example of that you can make good money off of a small position size. Now, if you watch my videos, I was talking to you about Apple, and I've been talking about Apple for a whole week now, and now we're talking about the daily, okay? We're talking about swings, okay? And I said 2 days ago, actually, maybe even 3 days ago, okay? I think I said it around this area right here. I said Apple is coming into a cycle, and the cycle was on the 1st. The cycle was yesterday. And I said don't touch it, because when stocks get around their own cycle dates, they get kind of funny, You might get a very big reversal, but you also might get a very big breakdown. And what did Apple do? Apple broke down lower, okay? Now, today we kind of had a slow day on Apple, not much going on as far as this candle at least. but you do have a little bit of support around this $4.18, $4.20 level. But it's very, very minor support. I really don't like it that much. So if you want to take a quick trade that probably doesn't even last a whole day, you could probably go for that, okay? But it's not the best trade setup. I personally don't like it, okay? Now if you look at Apple on the intraday on the 10 minutes, it had a kind of a slow bleed, okay? And it's very interesting to see this, okay? It gapped up. Okay, it didn't even gap up actually. The markets gapped up. Apple didn't. Apple had to put in this green candle, so buyers had to come in, rescue this stock, and they did. And then it chopped sideways along with the markets. And then when the market just broke down a little bit, guess what? Apple broke down a lot and reversed everything that it had the whole day. Okay, so I see a little bit of bearish consolidation on Apple. It's underneath all the major moving averages on the 10-minute chart. So Apple looks bearish to me, okay? So, you know, I'm kind of split on Apple because I see the daily, you know, I know that there's going to be a lot of people who want to get in and jump in on Apple. There's a lot of people that want to buy Apple for some strange reason because it's this invincible stock, nothing can go wrong with it. Well, you know, it's just another stock like every other, okay? But just be aware that if you go short Apple, you're going to have to deal with these, you know, naive buyers, okay? And so, you know, for me, I see bearishness on Apple. I wouldn't touch it for now, okay? So that's just my opinion. Now, let's move on to the next thing. Another stock I want to mention is Valero. Valero was horrible today. Horrible, horrible. And you see the intraday. Let me show you the daily so you kind of get a summary of it all. On the daily chart, Valero lost, I believe, 6%. I'm not checking how much these stocks have lost by 4 p.m. But when I was checking about half an hour ago, Valero had lost 6%, and just very bad. I mean, it came into support here. Okay, so that's the good news. It came into the support around the $42 level, around this gap window. So it bounced, but considering how big of a support this is, I mean, this is not small support, okay? I really like the support level. It really didn't bounce that much, okay? And you have to say that Valero is having a bearish consolidation pattern, okay, that today started breaking down, okay? And so if I look at the target for this pattern, you're going to see that the target would be around this area, this $39 level area, maybe even this gap fill around $38.78. So this is the ultimate target for Valero. If you want to short it, I guess you could, okay, because I do see some downside on it. But beware, because, you know, the question now is, are you chasing it because you already had this breakdown right here today, okay? And it is into support. So Valero could go either way. It could still defend this support right here and go higher, or it could ultimately start breaking down lower to this gap fill. Now a lot of you may say, well, you know, is that a head and shoulders pattern? Because you see the left shoulder here, the head, and then the right shoulder. But I have to remind you that the neckline actually slopes down, okay? Whoops. The neckline actually slopes down on Valero, and if you know anything about head and shoulders patterns, it should slope up, okay? And it's not, it's sloping down. So to me, this is not a valid head and shoulders pattern. Nonetheless, you know, bearishness, we have to see it for what we see it. 6% down on a stock when the market gapped up to all-time highs. That's very powerful, okay? So watch Valero. My recommendation to you is let it consolidate. Let it consolidate sideways, and then short the stock, and you're going to have a nice target around this $39 level, okay? Now, there is another stock that has been doing this, has been consolidating sideways, and now is ready to be shorted, at least in my opinion, okay? And that's Fedex, okay? And if you remember, I believe 2 weeks ago, FedEx warned, you know, how horrible shipping was across the world or something like that. I don't care. But what happened is that it gapped down and was selling, and now it's been in a sideways range, and I kept telling you, don't short it yet, don't short it yet, it's not ripe. Well, it looks like it's ripening now, okay? And if you want to go short, that's fine. I would wait for a retrace a little bit higher to be safe. I think if you can get a short around the 98.50-ish level, if you can get an entry there, you're gonna have more protection for your trade. And then, you know, if you get stopped out, your stop out is gonna be very, very tight. I would keep a stop out maybe around 99.50. Okay, and this is for a swing. We're talking about a swing short, not an intraday scalp or day trade. Okay, so maybe about $1 stop out. Okay, that works out. Okay, and I know it's a little bit of a large stop out for some of you, but remember, this is for a swing. We're not talking about a scalp. Okay, so you know, it's a very nice stop out for a swing, about $1. And then the good news is that you have to look at your reward, and here your reward, if you were to enter around this level, for example, let's say you enter around this 98.50-ish level. Let's say tomorrow it retraces up, okay, and you short it right here. Your stop would be a close, and I'm talking about a close. So in other words, if it fluctuates intraday above this level, we don't care about it. Okay, we don't care about getting whipped out. We want to see it close at 4 p.m. We want to see it close above this level, this excuse me, 99.60 level, in order to get stopped out. Okay, so this is your short entry, this is your stop out, but your target is really nice. Okay, your first target would be right here, okay, or the 200 MA. Okay, so they're going to be around the same area. Of course, the 200 generally slopes up, but around that area is going to be your first target. And then if you're patient, okay, your second target could even be around here. So if you ask me, and I have a $1 stop, but then I can go from $98 all the way to $93, that's a really nice risk to reward ratio. Okay, so this would be a nice swing short trade. And again, just, you know, make sure you get a better entry. Don't short it tomorrow at $97 if it keeps going down lower, because obviously you would be chasing it. Okay, now I want to talk about home builders. Home builders were really weak today. For the most part, they were down. The nicest pattern that I see for a swing is Toll Brothers, TOL, and TOL has been bleeding down lower for 2 weeks. Most of the home builders have been weak for quite some time, and so right now we're just looking for, you know, an entry for a long. But beware that these guys are already weak in a market that's at all-time highs. So if you were to go for your longs here, for your swing longs, don't overstay your welcome. Hold it for a day, maybe two if you're brave, but even if you do that, keep your stops very tight, because they're showing weakness. And so any bounce here, you have to be realistic. You can't expect, you know, a 10% bounce on a stock that's this weak. Okay, but I really like this area right here around the 200 MA, and actually even a little bit lower. Okay, I really like this gap fill area. So if you kind of go back to this candle, there's a little bit of a gap fill around right here. Okay, around this 32.30ish, okay, level. And what most retail buyers or retail traders are going to do is they're going to see this 200 MA, this red line, and they're going to say, I'm going to buy it. Well, okay, the 200 MA is actually a good level to buy a stock, but not when the stock has been this weak. Okay, and when you're in a market that's at all-time highs, and a market that's basically just, you know, who knows, maybe days removed from having a big down day, because, you know, the market's up. I mean, something's going to have to bring it down eventually, okay, even if it's a small correction. So you're risking a lot by taking this level. Maybe you get a little bit of a bounce. I don't know, I might be wrong, but me personally, I'm waiting for the next level. I'm sitting down and I'm saying, well, this is my level. I'm going to wait on this level. Okay, and if I go back and I use my fib levels, my Fibonacci retracements, and look at some support, okay, so if I take it from these two pivot points right here, I see that there's some really nice support here at 32.28. So, you know, I have these really nice levels here at this 32 30 area. I have a gap window, I have a 618, I have all these red candles going down. So I really like this level for a long, but keep it short, don't stay in it too long, and don't expect much out of it, and keep your stops very tight, okay? And my advisement to you, my advice for any longs that you're taking right now, keep your stops very tight, okay? This is for your longs. Now, another thing I want to mention, metals. Metals, we have to talk about metals. GLD, okay? GLD basically traded far away from where it traded the last couple of weeks, and it actually had a really nice bullish consolidation pattern here, and so you would have expected it to go up, but guess what? This was a micro, a pattern inside a macro bear flag, okay? And it seemed like GLD broke out of the macro pattern, and so now it's trying to break down lower. Now don't touch it here, you would be chasing it. It's kind of, it looks very strange to me. I mean, yeah, it is a bear flag, but I really can't do anything with this chart right now, okay? But I want to show this to you because it seems like we're seeing this across the board in all the metals and miners today. So if you look at GDX, which is basically the miner of that gold we just looked at, same thing. It broke down lower. You could argue that this was a little bit of a bearish consolidation pattern. It broke down lower. It is into support now, okay? But you know, I personally don't really want to take a chance, okay? It's not, to me, it's not worth it as a trade. I have to, something has to really get my attention, and I have to say, well, you know what, this is really worth it as a trade for me, and it's not worth it for me at all. Okay, so if you look at the whole stock on a longer kind of time frame, and we're looking back years, not really much to see here. I mean, it's rolling over a little bit. So if this were to be some sort of big macro bearish pattern, you would have to see significant sideways consolidation. You're not seeing that. And if you go to GLD, GLD is actually bullish. Okay, so everybody's been buying gold for all these years. It's in the advertisements and, you know, on TV or whatever. But we're just seeing this bullish consolidation pattern. We just see a little bit of a bearishness right now in this moment in time. But overall, GLD looks good to me, like it wants to go higher. Silver, if you look at silver, and I want to look at more of today's action, silver kind of broke out of the same bearish pattern as well, okay? And you might get a little bit of support here at 25.30. So this does get my attention, this 25.30 level. I might actually buy this, I don't know. Or maybe I'll find even a lower level. Let's see if we have anything below that, okay? You have a little bit of a level here at 24.43. So write those two down. Keep looking at the pattern. Obviously, the pattern sometimes can tell you, well, you know what, we like the level, but guess what? The pattern is not in that direction anymore. So you have to look at it on a day-by-day basis, but keep those two in mind for silver. Now, another one I want to look at is JRCC, James River Coal Miner. I mean, this stock is horrible. I mean, it's at all-time lows when the market is making all-time highs, and it's virtually useless. I mean, it's worthless because it's $1.50, you know, for something like James River Coal. I mean, that's very embarrassing, I have to say. You know, it's been very bad for, I don't know, it looks like 3 weeks. It's been bleeding lower, and today it made a new all-time low. And when I was checking it before the close, it was down 10%. Okay, so maybe it's down 10 or 11%, I don't know. Another one I want to look at is Southern Copper. And these copper stocks are showing a lot of weakness. Look at this, stock. Look at this big red candle that we got today, and the market spiders just put in all-time highs. So how are we getting, you know, these copper miners and, you know, these coal miners, gold and silver, how are they breaking down on us like this? Why? Okay. And another one I want to show you is FCX, my favorite. I have this one on my chart. It even has its own color on the chart. It's orange on my chart. But same thing, Freeport Mac broke down today. Okay, now I wouldn't touch them now. Obviously, when you see these breakdowns, you want to see a little bit of consolidation. But the reason why I show you this is because it makes me wonder if this up move in the market is real. It's not. Okay, it's not, because these guys, Freeport Mac, Southern Copper, James River Coal, all these miners are showing us what's going on in the jobs market and what's going on as far as materials, as far as building, expanding, global trade, and so forth. And we're not seeing that. Not today. Today was a great example that something is on the horizon and that things are not as good as they are. And also, I'm not going to show them now, but look at oil stocks. Oil stocks, for the most part, weren't green today. They were red. Okay? So even though you took that Chevron trade today, well, those stocks were down on the day. Valero down 6%. And Valero has been very, very strong last month and even in January. So what's going on with these stocks? It makes you wonder what it is that's keeping the spiders positive. You see all these stocks that are down, 5%, 8%, 10%. And it makes you wonder, well, what is keeping the spiders positive? Apple is down. We know how much of a market cap Apple has. We know that Google has been rolling over. Same thing, big company. All these copper miners, oil companies. I mean, look at ExxonMobil, how big of a company it is. And we see so much red in those companies, so it makes me wonder, how do they do the math on the spiders to actually keep it at all-time highs? And now we're gonna enter into an earnings season in a couple of weeks, and so watch out for these companies, these metals, miners, oil, home builders. Also watch out for these companies. If we see a little bit of weakness, it's going to slowly peel away, okay? And we're going to get to the truth of what is really going on in our economy. Things are not as good as they seem, okay? We might get a little bit of a correction based on these news that we start getting every day as far as earnings and so forth. We might get a little bit of a correction throughout the rest of the year, okay? And I'm not calling anything dramatic, okay? That I think comes a little bit later, but what I'm saying is we might get a little bit bearishness. I'm not sure if we get it this month, okay, because it's just too far out for me to think about it. But look at these. I'm not going to repeat myself, but look at copper. Copper is going to tell you everything. GDX has been talking to us today. Gold started talking to us today. Home builders have been talking to us for 3 weeks now. Oil started selling off last Thursday when we put in that all-time high and everybody was cheering about it. Oil was selling off in the late afternoon, and a lot of other stocks as well. Apple has been weak. The market goes up, Apple goes down, okay? And just look at these stocks. As far as tomorrow, I really don't have anything else to give you tomorrow. As far as, at least just look at those swing trades that I gave you. FDX, if it retraces back up, maybe you can go ahead and short it. Toll Brothers, if it gets to that level in the next couple of days. If you took the SDS swing long with me, keep a break even. We are already up nicely on the day, about 20 cents. So, good job there. But we will be looking at it on a day-by-day basis. And follow me on Twitter. I give out intraday scalps and day trades all the time. And of course, visit our website, tradethesestocks.com.